Later CPA and Associates, accounting done great by mates.
Hi there, I'm Daniel Later with Later CPA, and welcome back to our new ongoing series, Tax Strategy, right here, right now, where we are talking about the great ways to reduce your tax bill and skip all the jargon. So today's topic is going to be on accountable plans. Now, I know that sounds boring. Frankly, everything in tax sounds a little bit boring, but this is not boring. This is a good one that potentially could save you a lot in taxes. You and potentially your own employees. So, if you or your team pays for work stuff out of your personal funds, things like mileage, your phone, your internet, your supplies, an accountable plan is how the business pays them back the right way without turning it into a taxable pay. So the goal of this session is you will know what an accountable plan is, what it can cover, and how it works for owners and employees, and the 3 rules that keep reimbursements non-taxable. So what is an accountable plan? In plain English, it's a written reimbursement system where the practice pays people back for valid business expenses they paid out of pocket. Now, when it's done correctly, the reimbursement is not wages. And it's usually not subject to payroll taxes either. It stays off the taxable compensation instead of being treated just like extra pay. Now, this applies to practice owners, especially if you're on your own W-2 and payroll like an S corporation owner. It applies to W-2 employees, your therapists, your admin, your billers, your practice managers, etc. And it can also apply to your contractors in some cases. But the cleanest use is for a W-2 employees and the owner employees. Now, there's 3 non-negotiable rules for an accountable plan. This is it. Rule 1, there must be a business connection. An expense must be ordinary and necessary for the practice and not personal in nature. Rule 2, there must be adequate proof. You must document the expense, the date, the amount, what it is, and the business purpose. Rule 3, return any excess. So if the practice has paid more than the proven business expense, that extra must be paid back within a reasonable time. Now, the return of excess is a lot easier to understand when we start talking about advances for expenses. But those are the 3 big ones: business connection, proof, return the excess. Now, for a reasonable time standard, there's a couple options. A common one is that you have expense reports submitted within 60 days and return any overpayments within 120 days. Now, if you are using advances, only give them close to when the expense will actually happen and require a true-up afterwards. So if you're sending a therapist to a faraway conference and you're giving them an advance for meals, for travel, etc., do it around the time that the travel will actually happen. Now, what can you reimburse for both employers and owners? The most common one is mileage. And this it can include driving between 2 locations, 2 office locations, driving to trainings, conferences, networking, the bank, doing supply runs, etc. Those all would count for mileage. It does not include commuting. Commuting is driving from home to the office or from the office to home. That is not part of what we can include in mileage. Now, the best practice here is to keep a mileage log with the date, the start and the end points, the purpose, and the miles driven. You can also include and reimburse the phone and internet, especially if you have telehealth or you're doing on-call. Now, reimburse the business use portion after you find a reasonable method to estimate how much is the business portion. Now, some examples are you could set a percentage based on the work use and the pay they receive, etc. You can look at this annually. You can potentially use the same as the home office percentage you're already using for your home office. There's a variety of ways. Make sure you have something consistent and something reasonable. Now, in the rare case that the practice does provide a phone, primarily for business reasons, that's usually a simpler way than reimbursing personal plans, although I do not recall having worked with a client who has provided a phone to one of their therapists or employees. So that would be really rare. Another common expense is the home office and home office related costs. And make sure and remember there must be a business purpose and a business reason. Now, this is the most common one for business owner employees or fully remote staff. Now, it does require a legitimate work setup. We had talked about that in the last session, but that is part of what we include in the accountable plan, the home office and reimbursable expenses. Another potentially reimbursable expense is supplies and small equipment your employees or you as the owner may be required to buy. A printer, paper, ink, any postage, basic office supplies, etc. Those can be reimbursable. Any continuing education, licensing, or other professional dues, those can also be reimbursable. Make sure it's still business related and related to the work they're doing. Another reimbursable is travel for business. This is hotels, airfare, rental cars, conference fees, etc., meals. Those can also be reimbursable. And also client care support items. Now, these are the things like any worksheets or workbooks you print out, any play therapy tools you buy. Yes, those are called toys, I know. And any other tools that you're using for your therapy sessions with your clients, those also can potentially be reimbursable. Now, there's two ways that you can do some of these. The first option is you can reimburse the actual expenses. That's the most straightforward, easiest to explain. Just make sure that your employees submit receipts, submit records, and that the practice reimburses the exact eligible amount. That's option A. Option B is you can provide an allowance or per diem for some items, things like travel meals or lodging, etc. Those things are a little harder to predict and harder to track sometimes, but you must still require the right documentation and must handle overages properly. Now, a big warning. You might be thinking stipend as a solution to all of this. Okay, it can work. But a stipend is usually not going to meet the requirements of accountable plans and will create additional taxable pay for your employees. So keep that in mind. You're basically just increasing their wage or salary by a certain amount. Now, if you want a fixed amount approach, it still needs a clear business purpose and proof and a process to return or true up amounts that exceed the substantiated expenses. So that's all for stipends. Keep that in mind. Now, how do you include your employees on an accountable plan? Well, that's a good question. Let's talk about it. So this is the paperwork side, the bureaucratic side. Now, first off, an accountable plan is not required to be written down per the Internal Revenue Code. However, it's a really, really, really good idea to have it written down. Just because you're not technically required to, you still should, because it will give you better audit defense in case anyone ever questions it. It'll have it written down if anyone questions it or wants to review it, and it'll make it fair and obvious to everyone. Now, who can be eligible for an accountable plan? All employees or roles that may require certain expenses, etc. It's kind of up to you. There are some more specific rules that you might want to go over, but that's generally how it works. Now, what can be reimbursable? We already talked about mileage, continuing education, travel, supplies, phone and internet, etc. Now, things that are not reimbursable: commuting, any kind of personal upgrade, any vague work vibe expenses. Tough to define, but when you hear it, you'll know it. Now, you do need to remember, have your required proofs, your receipts, your mileage logs, any invoices, etc. Keep those records and proof. Remember the timing rules. Again, a good idea is submitting expense reports inside of 60 days and returning overage in 120 days. And remember, there should be an approval process. Your manager or yourself should be approving these things. Keep it consistent. The same categories and rules for everyone in the same role. We don't need to distinguish. We can be selective on which roles get what type of expenses reimbursed, but we cannot be biased against others. Make sure there are rules about pre-approvals and caps, etc. You don't want this to get out of hand. Now, how should this look on your bookkeeping and payroll? Good question. Now, your reimbursements should be recorded as reimbursement expenses, not wages. Don't run accountable plan reimbursements as a bonus or a commission. That would make it taxable again. And store your documentation in one place. A convenient folder, a Google Drive, something like that. A couple common mistakes that creep up when you're paying reimbursements without receipts or logs. When you're calling something a reimbursement when it's really extra compensation, reimbursing commuting, not having a written policy. Remember what I said, it's not actually required, but it is a really good idea to have one. More mistakes, paying advances but not reconciling them afterwards, reimbursing your mixed personal and business costs with no reasonable split. All common mistakes. If anyone audits that could torpedo your accountable plan. A couple closing thoughts to end out. An accountable plan is not fancy. It's just a clean system to show the business reason and the proof and the timing of your reimbursements. Now, if you have owners or employees paying for work costs personally, this is one of the simplest clean up and optimize moves that you can make. One critical thinking question for you. Which two categories are causing the most personal spending for your practice needs? In your business right now, is it mileage? Is it phone and internet, continuing education, supplies, or travel? And what would it look like to reimburse those monthly with documentation? Now, next week, we're going to be talking about business vehicle strategy, mileage versus actual and documentation habits, etc. Again, another boring sounding topic, but I promise it's not as boring as that. So don't forget to like and follow and subscribe for future events and tax advice. Visit our website, latercpa.com. Have a great weekend and keep helping others to help themselves, and let us help you do just that. I'll see you next time.